So this is ES on the 19th of December. So I'm making this video to answer a question I get from so many people. How do you determine key levels? So forming key levels are the backbone to your entries, and you need to have them for good entries, but also good exits. So if you find yourself FOMOing into position, getting into a position, and then seeing the markets reverse on you, the reason why is because you don't define your levels. So let's quickly break this down. So when I form a key level, right, there's a couple of things I'm looking for. I'm looking for a 15-minute fair value gap, and I'm just going to draw the zone like this. Now, when we come into an FVG, a 15-minute imbalance, we can either break to the upside or we can break to the downside. Now, how do we determine whether the level is going to hold to the upside or the downside? So we do that through, in this case, seller absorption. So price can either make a demand, or we look at that through buyer absorption. So price can either make a supply. So these are the two main things we're going to be focusing on this video: supply and demand, and we're going to be mixing them with 15-minute zones, right? 15-minute areas of imbalance. So if we go to the charts over here, this is ES on the 15-minute time frame, right? 15-minute time frame, S&P 500 futures. So how do I form my key levels? So let's quickly break them down one at a time. So we're going to start from this level down here. So this is 67.75 to 67.55, around about this region. It's a bit of a wide region, and I'm going to explain how I got it. So in order for us to understand this level, we need to keep going back, right? We need to keep going all the way back to this is now the 7th of November. So when I pick levels, right, what happened here? When I pick levels, I want to see how the market reacts at 15-minute fair value gaps, right? So this is a 15-minute fair value gap, and I choose the candle before the fair value gap. So from here, it becomes very simple to look at price action. So if we just kind of break this up, we want to see what was going on over here, right? So this was Friday the 7th. Now, when we come into a zone, we want to use order flow and see whether the market broke above the zone or below the zone. So in this case, what the market had done here is we had printed an area of demand, right? So there was a failure of aggressive sellers, which meant that the market was bullish, right? We broke above this zone. This is an area of demand, right? So if we just get rid of replay, what we're basically looking for is we want to see how the market reacts to these zones. So it's a little bit like support and resistance, but the only difference here is that you are using the order flow to back it up, right? So I'm going to be breaking that down in a lot of detail in this video. You want to use the order flow to back it up. So what was going on here is that there was a rejection over here, which meant that there were passive buyers at this region. Then the following week, we actually saw the flip from passive buyers failing to passive sellers holding at this zone. And so this was a critical zone throughout the whole of November. Now, one thing you want to note is you're not looking to trade off any random fair value gap, right? Fair value gaps are only useful to trade from if they have been backed up by order flow. Now, how do I pick the fair value gap to trade from, right? There's no exact rule for this, right? But a couple of things I look for when I pick fair value gaps is I want to see price taking out previous day lows, Asian lows, maybe even Asian highs before Asian lows. You're looking to seek areas where the market has created lows and highs, extremities of lows, extremities of highs, and you're looking for break and retests at these 15-minute zones, right? So that's kind of basically all you're looking for. However, there are lots of you could argue there are lots of key levels everywhere. There's lots of fair value gaps everywhere. What validates a fair value gap is your ability to read the order flow in and around the zones. And that's what we're going to be going through. So just picking this as an example, because this is a critical level throughout the whole of November and December. So let's go to the ATAS platform. So this is the ATAS platform, right? ATAS. And we can see we haven't actually got data going all the way back for this zone. So what was going on here is we had a lot of key rejections here in November. So we had November 24th, November 25th. This was a critical area in the markets, right? So if we take an overall kind of step back view of this, what was going on, from a 15-minute perspective, we had a structural low, structural high, structural low, structural high, structural low, and our high is all the way here, 11th of December. Now, this was a key level that got created towards the beginning of November, and we saw the market holding with passive buyers and passive sellers, passive sellers, passive sellers, and then passive buyers, and now again, passive buyers. So one thing you want to get used to is if you can see areas on the chart that have given you the absorption of buyers and the absorption of sellers, Don't ignore those levels, right? Have those levels on your chart, right? Write them down, have them on your chart so you know where the market is most likely going to react to. So one thing you want to understand is that the market will gravitate towards where the limit orders are resting. And I'm going to go over what limit orders actually mean. So we tap into this zone now, the 18th of December. So about 6 weeks after the creation of the main zone, which was the 7th of November, right? That's one thing to bear in mind. So if we go to a 5-minute chart now, we want to see how the market reacted to this level. So we can see a bullish move to the upside, right? We can see that bullish move. So how do we know that this is going to be a demand zone, right? So of course we can see prices moved up, so we can assume it's a demand zone. But the theory behind that is here, right? So let's go to a 5-minute and let's break down what was going on here. So we want to see this rejection. Now, again, you can use ATAS, you can use Sierra charts, or you can use Motive Wave, whatever deep charts, whatever platform you want to use. I prefer using the ATAS platform. It's the cleanest for me, the most effective for footprint charts. So if you look here into this, we have this rejection here, a lot of aggressive sellers. So I've made lots of videos on footprint charts. I've done a footprint chart series, go and check that out. But what was going on here is you can see a lot of red delta. So think about this super logically. More sell orders hitting the bid than buy orders hitting the ask. So that's why we see a ton of red. We call this the delta. Now, when you see negative delta, right, all this negative delta here, but we see a push up, right? What this means is that there is an absorption of sellers, right? Aggressive sellers hit the bid. Those aggressive sellers fail because we couldn't break below the zone. The sustainment, if that's a word, of higher prices means that we are at an area of demand, right? So that is the main sort of thing you want to focus on, right? We're at an area of demand for this particular reason. So now we want to focus on this key level over here, right? So again, what makes this key level valid? So in this case, we're looking at, again, extremities, right? Previous day lows, previous day highs, often your best friend. Same as this zone all the way back here, right? So this zone back here was created for that level. That same reason. We want to look here now. So this level, this particular level over here, again, very important. So let's break it down. Tuesday, the 16th of December. I just want to break this down so people can sort of understand, right? So how was this level chosen? So this is what validates the level itself, this region here. So what we can see, big gap here, right? There's your gap. And so your level is simply the candle before, right? Candle before like this, or you can include the previous day low, right? Perfectly fine. Now that is your level. So what we're looking for really is you're looking for reactions off this piece of text here. So you're looking for reactions off this one, you're looking for reactions off here. So this specifically in this region, so if we break this down, this basically is referring to, we had demand holding, so we had higher prices, so we had demand, then we had a flip to supply, right? It's a demand to supply flip. So you want to be focusing on what the price action, what the order flow is doing inside of this region. Now, if we break this down from an ATAS perspective or an order flow perspective, what we had was this, right? So we had our first initial bounce over here. So this here is a classic example of absorption of sellers, right? Think about this. If you have an absorption, a lot of large aggressive selling over here, right? Negative delta, which means that there's more sell orders, aggressive sell orders, than aggressive buy orders, right? But we were able to break above the level pretty aggressively as well. So from here to here, so what that's telling you is 68.30 to 68.25, right? 68.30 to 68.25, there are more aggressive sellers than aggressive buyers, right? But we're able to sustain higher prices, right? So when you sustain higher prices, despite having a lot of aggressive sellers, that means that the sellers were absorbed. So this is a classic absorption case. So this is what makes the key level valid, right? So we're seeing a lot of absorption of sellers in this region, right? Absorption of sellers. Now, in this region, we see the exact opposite. So we see absorption of sellers, switch to absorption of buyers. Now, again, what makes this a key level is the fact that there is absorption. So absorption, for me, corresponds to a key level being valid, right? Because a key level is only a key level if there are limit orders resting at that region, right? We see limit orders only through the order flow platform, right? We can see limit orders resting inside of the candles, right? Footprint charts, basically. Now, the footprint charts give you an indication as to what was going on. So here we had the absorption of sellers. If we just go over to the right, in this case, we had the absorption of buyers, right? So what we had over here, think about this, right? Buyers, and we break below. Even over here, right? We see this via the blue positive delta, right? So we have blue delta here, we have blue delta here, and we continue to break below the zone, right? So a lot of aggressive buying and a break below, a lot of aggressive buying and another break below. So it shows you the switch, right? The buyers were unsuccessful at 68.17 to 68.20, confirming this as an area of supply. So when we go back to the candlestick charts, what we can see is this is definitely a key level. I'm just going to write KL, right? Area of demand flips to area of supply. And so we're seeing that switch just like this. So this is a key level you want to be focusing on, right? It's a key level because we see the absorption of the actual orders, right? That's important. It's not just a random zone. It's where we see an absorption of sellers. So once we have that established, we just want to continue. We want to see basically how price reacted. So this was a trade I didn't actually take, and this is what I wanted to go through as well. So I wanted to go through how you can capitalize on this coming into a new session. So this was now Thursday, the 18th of December. So going into market session, right? Let's break down my plan. So going into market session, I basically had this as a key level. So this was sort of the plan going into the key level. I wanted to see a breakout of this level or a breakout of this level, right? Unfortunately, I hesitated. I missed both setups, took a break even here, exited at almost nothing. So what I wanted you to understand is what was going on here, right? So it's not a coincidence that the market rallied in session at this level, because what we had already established this as a key level, right? So if you were trading on Thursday the 18th, you basically wanted to be buying off this level, maybe off this level as well. So key level 1, key level 2. We're just going to be going over key level 2. Now, when you enter a session, you should already have your key levels defined from the night before. The night before, or certainly before the session begins, you should know exactly where you want to be buying, where you want to be selling. So your job is to turn up, wait for a break above, wait for a break below, and simply trade the breakouts. That's all you have to do. Now, what makes a key level valid is the order flow. What makes a breakout valid is the order flow. What makes your target valid is an order flow back level. So everything throughout every process is order flow driven, right? Footprint chart driven. Now, we can see here 68.17 to 68.30 is a key level. So here to here. Same with here. We saw, again, a switch from demand to supply. Then pre-market, we break this to form demand again, right? So we're seeing that flip from the same level that held on Tuesday, Wednesday, and now Thursday, right? So it's notice how we have one level throughout the entire week or most of the week. Now, this is what we use. This is what we use to determine whether we want to be getting long or short. Now, I wasn't a fan of this price action, to be fair. I mean, we kind of ranged around for quite a while. But what we want to be focusing on here specifically is the order flow interactions at this zone, right? So you want to see 68.30 to 68, call it 68.20, right? Roughly this region. What we're seeing is we're seeing a breakout, right? Now, what kept me out the trade is the fact that we had another key level resting here, 68.50 to 68.40 or 45 area, right? This is what kept me out. So we had somewhat of a rangy sort of day. I wasn't a big fan of this. So we kind of ranged from 9:30 Eastern all the way to almost 10:30 Eastern, to be fair. This 1 hour range kept me out of it. But looking back now, we had absorption of sellers here. Again, absorption of sellers. Now, what the problem was for me is that there was an absorption of buyers here. There was an absorption of buyers here. So I wanted to see a break above this level. However, looking back in hindsight, these two setups, not this one, this was the setup here that was valid. So I just want to break down why that was a valid setup. And so the main thing to take away is that these zones, this particular zone, was valid all the way from Tuesday, right? So Tuesday through to Wednesday, through to Thursday, right? So you're looking for the same active zone to give you the confirmation. And so this is how you could have found that confirmation, right? So this is 950, right? 950, let's just go to the footprint charts and see what was going on. So coming into this region, this is what we had. So this is now a 5-minute chart. So this is a 5-minute chart on ES. And again, we're breaking this down. So 9:45 Eastern, right? In fact, let's get the candles up next to each other. 9:45 Eastern. This is what we had, right? So we're seeing this blue box over here. This is absorption. So for those who don't understand absorption, this is how it works. What you want to see is you want to see aggressive sellers with no follow through. So in this region over here, so 9:40, this would have been 9:45 to about 9:50. You want to see a ton of selling volume, right? Heavy selling volume, but you're unable to break below the zone, right? Because we found support in this region, right? We found aggressive sellers failing. Now, when you see the aggressive sellers failing and we have a break above, this confirms an active zone of demand right here. This is a demand zone. As I've made a lot of videos on this. If you're unaware of what a demand zone is where aggressive sellers fail. Now, when we come back into this zone, when we come back into the actual trade as well. So this was a trade I should have held on to. I didn't, unfortunately. Longs would have been over here, right? This would have been a long position. Just over here. And of course, we really rallied, right? This trade really rallied. I exited somewhere around here. So not very good trade management, but the entry itself wasn't bad. And that's what I want to go through. All right, I want to go through how you can use order flow to enter your position at a key level. So once you've derived your key level for the week, again, this week it was 68.30 to 68.20. Once you can see the absorption of sellers, right? Absorption of sellers over here. This here corresponds to a demand zone. This is a true demand zone in the market. So let me draw that again. This is a true demand zone in the market because we see sellers aggressively failing, right? So we're just going to go over the second rejection over here. So this rejection came at 10:15 or 10:15 Eastern. Looking at how 10:15 Eastern behaved, again, what we can see here, a ton of market sellers, right? Aggressive sellers hitting that zone, right? Aggressive sellers. Even here, what's interesting, we had a green candle on the 5-minute chart. So if we go to a 5-minute chart, what you can see here, we had this big 5-minute aggressive candle, right? Big 5-minute aggressive candle. Now, what was interesting is when you see a 5-minute candle like this, right, you can have aggressive sellers inside of the green candle. And so this is a true measure of absorption, in my opinion. If you're seeing a green candle, by definition, that means prices are going higher. The market wants to move higher, right? We see a lot of volume coming into the markets as we break above the zone. But what's interesting to understand is that this was an active key level, right? Absorption over here of sellers, right? These are where passive buyers are stepping into the market, right? Passive buyers step into the market when aggressive sell orders fail. So between 68.30 and 68.25, aggressive market orders were hitting the bid. They were outnumbered, right? The aggressive buyers were not there compared to the aggressive sellers, right? But we were able to bounce higher, which means that limit orders, right? Passive buyers or buy limit orders were resting between 68.30 and 68.25. And so that ultimately was responsible for this bullish move, right? We had quite a bullish move before ultimately we broke to the downside, just over here. Now, that's kind of what I wanted to go through with key levels. So this was another key. This was another example of how basically rejections happen, right? So when you see these big moves, these big rejection moves, even down here, even where else? Even here, to be fair, a lot of them are derived from 15-minute fair value gaps and order flow. So once you know where the rejections are, your job is just to wait for them, right? Keep waiting for them. And so the best way that you can approach the market is by defining your key levels, waiting for the market to hit your key levels, and using order flow to trade away from your key levels.